picture.
Let me tell you about Yield Max. Let me tell you about that.
You'll just get infinite returns.
I know.
Yeah.
Unlimited wants, unlimited needs.
I'm being like the narrator here, but if you read the counterpoints, it's like you guys are talking completely different languages, because now he's saying there's no margin. Yeah, for the grower, retail operates differently. It's about acquisition price and disposition price.
Yeah, and volume. It's about volume
and turnover.
Yeah,
it's like, yeah. If you're in the growing business while having the stores, yes, you're gonna get cooked, because your input costs and production are gonna cook you.
Yeah, well, and the retail side's not typically very high margin. The growing side's typically pretty high margin, right? And so, but if prices crush, is the retail half of your business actually going to be able to overcome the losses from the growing half of your business? And I really doubt that. We're seeing that up in Canada. There's a bunch of Canadian companies that have already gone into this situation where they're vertically integrated all the way from dirt to end use customer. And as the price of the wholesale price collapsed and their flat costs involved in growing didn't collapse, now, many of them are growing it for negative gross margins, right? So the more they grow, the more they lose. It's a real bad idea. But if they're also selling it for a slight profit, they can make up some of those losses. But do you really want to be in an industry where or in a company where half to a third of the company is hemorrhaging money? And plus the cost of expansion for a business model like that, it's huge, right? You got to set up grow facilities, you got to set up distribution facilities, packaging, warehousing. You have to store product, all that, and then you can finally set up a retailer. High Tide, I believe, all they need is a handful of small distribution facilities for storing inventory, right? Shipping, organizing inventory that gets shipped to the company. You got to have a receiving location for all that, where it gets received and then distributed out to a bunch of stores. But they don't need a grow facility. They don't really need a packaging facility unless they want one to offer these high margin brands to like the elite customers and stuff. So their expansion costs are ultra low compared to their competitors. I think the first time I talked to you, I was like, pull up their asset turnover ratio, because that's revenue divided by assets. And so they have a very asset light model, which means that any money that they get, they're going to be able to very quickly turn into new revenue. Whereas these growers, they have a very asset heavy model. So it takes a huge amount of capital for them to be able to grow into a new market. They have to have a much larger pile of cash to, say, for example, expand into a new state. Like if they wanted to put up 20 retail locations, High Tide could do that for a certain number of dollars. And all of the growers, because their business models are so clunky, it would cost them a significantly higher number of dollars just to set up the infrastructure, just to get everything, the skeleton of everything going.
I think, not to be the translator again, but distro is for vertically integrated. So you said something, and I understood you in the language you spoke. But I think there's a miscommunication that's continuing to happen. But a distro, is for vertically integrated. And you're making the argument, I'm understanding you, that vertically integrated model is one that will fail. Yeah, correct.
Well, it will do not super well when it comes to growth. So it might succeed really well long term. It just won't grow really well, right? It won't take over the world. It won't become a global player, right? I'm not here for some regional coffee company. I'm here for Starbucks. Mm-hmm. I want a company that's going to has aspirations to be in every country that will let them in.
Yep. And you're saying High Tide is not. So just we're doing the proper translations here. It's not a distro.
Correct. Well, it is when it comes to the glassware, but not the cannabis.
Yeah.
Right. And so they have relationships, or they own. It's a little unclear. They're acquiring glassware in Southeast Asia, in the South Pacific, in places where it's cheap to produce, and they're shipping that all the way across the globe to places like Canada, North America, Europe, England, stuff like that. They have a customer base there, and that is basically vertically integrated. But they are not vertically integrating the cannabis, the flower, the concentrates. They're not producing it. They buy it wholesale, they resell it. Sometimes they buy it wholesale, repackage it into a brand, and then resell it. But they do not grow it.
They're showers, not growers. But that's the kind of companies we like to invest in here in the Cash Flow Kings. But I want to ask everybody on here before we head out, because we're almost at the hour 30 mark. What is the approach? I know, Blake, you're probably the heaviest and high tide out of all of us when it comes to like allocation. How are we all approaching it allocation wise? Fiscal, do you want to start?
I mean, I probably would like it to be somewhere in like the 10% range of everything I've got.
I'm going
it's currently
for
hanging out around 7% for me of like total wealth, but it's like 90% of my portfolio, my brokerage is like I have multiple brokerages because most of my money's in real estate. So I'm actually thinking about de-risking away from real estate, and then putting more money into the market in general. And if or when that happens, I'm going to have to ask myself some serious questions about how much of my total wealth I'm willing to put into just one company, even though my conviction is really high, even though I see the opportunity. I know too much about risk to put all my eggs in one basket. But so I like to tell people I have an irresponsible amount of it in my brokerage, right? 90% is outrageous, but it's not an irresponsible amount of my total wealth. So I wish it was higher though. And when people ask me how many shares do you have, I always say not enough.
And you're going to go first, Ryan, or you're going last? I'll go.
ladies first.
Ladies first. All right, I'll take it. I'll take that as a compliment. 2024.
That is a compliment. Yeah.
Thank you.
Target.
All right. So for me, it's I'm embarrassed to say with everyone throwing their percentages out.
Didn't you recently sell some puts?
I'm selling puts. I'm in the process of selling puts. But as far as percentages go, it's not going to be. I think at my target for the puts at current, it will be around just above 1%.
Hey.
If all the puts get exercised, and the premiums on the puts are pretty good, so my break even's quite a bit lower. And I'm working with my broker trying to play with the bid ask, and I'm maybe being a little bit too greedy, if I'm being honest, because as Fiscal knows, I was talking with him the other day. I was trying to get the $1 on them, but I didn't really get any bites, and I only got a few 25 contracts executed at 95 cents, so not the worst. But I'm trying to get some more, and maybe I'll just settle for 90 cents. So
yeah, I've been side eyeing the puts as well. Just I would love to get filled at 95 per contract.
What broker do you use? If you
I use Schwab for the buffoonery.
They tend to be good at being able to get the some good executions. Merrill has been really good. I used to use Schwab too. Merrill's been really good at getting contracts specifically very close to the ask.
Yeah. So, I need to free up some cash to do it.
Bids.
Yeah.
So ask.
I'm at 1% right now. Okay.